Hello and welcome to the Experts on Mortgage podcast. I'm your host, Mike Eshelman. Today I have Christy Soukhamneut with me from Flagstar. And you have one of those titles that when I read it, it brings a lot more questions to what is it that you do? So thank you so much for joining the show. I really appreciate it. We're going to talk about CRA today, Community Reinvestment Act, as well as we're going to get to know Christy a little bit better. So Christy, welcome to the show. If you don't mind, kick us off with who are you and what do you do at Flagstar?
Mike, thanks so much for having me today. It is a pleasure to join you. And I have one of the best jobs in the world. I get to do a little bit of everything. I grew up in the industry being a mortgage loan originator on the street. And in that position, one of the things I always wanted to do was tinker behind the scenes and figure out all the cool toys that an originator needed to get their job done. And so today, I'm kind of the person behind the scenes that figures out what are the shiny objects that an originator needs, both in terms of technology, tools, resources, processes, systems that really make the front end work smoothly. And I get to figure out those things and get them to the originator on the street. So that's what I do. It's the coolest job ever.
It sounds like it's a big puzzle and you get to put it together like every day, every week, every month to make sure that there's a good, complete view. In other words, so Flagstar's loan officers are operating pretty smoothly. Is that a pretty decent analogy?
It's a pretty decent analogy. And like I said, it is the best job ever.
Yeah, it sounds like a lot of fun. I started as an originator as well and have migrated over to marketing and now kind of live in the data world, but super passionate about fintech and the new digital mortgage applications that are out there. So it seems like you have my dream job.
Well, I get to work with people like you, bringing all of that to the table.
Let's switch gears and talk about CRA. Now, as CMBs, I mean, this is one of those issues that we had to be familiar with, but it's fantastic that we're talking about this because, sitting at Flagstar Bank, I mean, it's something that you certainly need to be cognizant of, but can you walk us through, like, why is this a topic that we need to talk about today? What's going on with the Community Reinvestment Act?
Well, I'll tell you, the Community Reinvestment Act, you think about a Venn diagram. I think about the Community Reinvestment Act and affordable housing and the way that they intersect. And affordable housing, when I started in the industry, was something that I was always passionate about. But it seemed like it was me kind of shouting into the abyss. And, occasionally there was somebody else that shouted back, but it wasn't kind of the popular topic that it is today. And now it seems to have caught fire. And the Community Reinvestment Act said that, hey, there are some people out there, we need you to pay attention to serving your community. And there's this cross section with affordable housing that comes into play. But the Community Reinvestment Act is broader than simply affordable housing, right? It touches on many more topics than that. So from our perspective as mortgage lenders, that's where we tend to focus our energy and efforts. Today, this topic is really important because there's a renewed focus. And one of the things that the Mortgage Bankers Association has been very vocal about is, as we're looking at the CRA modernization, currently there are two separate proposals out there that are incongruous, right? They're different. And we could be forced to have to comply with two different regulations for the same act. Right. Which would not be a good thing from a regulatory standpoint. And MBA has been very vocal and supportive in terms of our membership in saying, please, federal agencies, could you get together and come up with one rule, one set of regulations for our members to have to abide by. So we appreciate MBA's support in that regard. And we appreciate their support in helping us, in helping the regulatory bodies come up with, how do we modernize this law and this regulation in such a way that we actually serve the communities better, and in a way that's not, that that combines the spirit of the law in a way that's not financially burdensome for the banks that have to do it.
Yeah, I was reading, recently some of the requests on historical data, just requested data that a lot of banks don't have, which kind of gives an incomplete view of performance. It just seems like it's a big burden and there has to be a simpler way. Is that kind of one way of putting it? I mean, what's the process at the bank of understanding? Well, I guess here's a better question. What is the process that the bank goes through to determine whether or not it's adhering to the goals of the CRA?
That's a great question. Let's address the data topic first, because we had a conversation earlier this year on a panel that I was on, and it wasn't actually related to CRA. It was related to just data that we wanted to have. So as we got into COVID at, 53, 54 weeks ago, at the time we were recording this, it was when COVID happened. A lot of senior leadership teams were asking for particular data points. And the question they had of, their management teams was, why don't you have this data? And the point was, it wasn't data we ever thought we would need, was the answer that a lot of management teams were giving their C-suites. And it was like, we never collected it. We never thought we would need it. And so it's not like it's very easy just to go back and get that data. You've got to go open up a paper file, or you've got to go find the file, and then you've got to key the data, and then you've got to get it. And that becomes very burdensome. The data is there somewhere. It's probably in a warehouse. So you've got to send somebody to go to the warehouse.
A physical warehouse.
Right, physical warehouse it's somewhere. It's not necessarily on site. And you've got to, imagine with me, a human being has got to get in their car. They've got to drive over to a warehouse. They've got to go, get the key out. They've got to unlock the padlock. They've got to roll up the garage door. They've got to dig in a file box. They've got to get the physical file out, put it in their car, drive back to the bank. They've got to lug the box up to their desk. They've got to open it up. They've got to find the information. They've got to key it in the computer. And now you can pull a report, right? And if you've got to do that for 100,000 files, just to get the data, that's going to take a lot of time, energy, and effort. Now, you'd love to provide that data. The data itself will be useful, but is it useful enough to focus those resources to get the data? Unfortunately, nobody has limitless resources. So is it the highest and best use of your resources to get that data? Or should you be spending those resources in another way to better help the community? And that's the question, right? If we had limitless resources, then absolutely we should do that.
Mm-hmm.
But considering the fact that resources are limited, what are better things that we could do? Or what is the best thing that we could do with those funds and that time of our employees? And so I think about some of the things that we've done in the past. You may know that one of the things that Flagstar has done is support the community of Pontiac. And as we've invested in this community, we have done a number of things, from rehabilitation projects of both, residential and commercial projects, to creating portfolio products that will allow us to finance properties. That one of the biggest problems that you see when you invest in communities is that a lot of the residential properties and commercial properties are not eligible for traditional financing, because as traditionally property values have to be rising in order for a loan to be made. And a lot of these communities, the property values are not rising, right? They're in depressed areas and they're falling. And so you have to make exceptions in order to make those loans. And so that's one of the commitments that we made in Pontiac, is we would make those loans even though you weren't seeing property values rise just yet. So we made those commitments. We did grants and down payment assistance and all the things to get the community, brought up to an area. Those are the commitments that we made, and they were multi-year commitments. So is that a better use of our funds than than these things. And I'm not making a judgment on what is the best use. I mean, obviously you need to comply with the regulatory bodies, and there are many factors to consider. So I'm not saying this is what we should or should not do. You know, obviously the regulatory bodies need to decide that. And you know, we will comply with whatever needs to be done. But we have to take these things into consideration and say, where do we want to invest our money, and what's going to be the best thing for the communities. And the MBA has done a great job in pulling together the parties and making recommendations to the regulatory bodies to say, where should we put this? Where should we put our resources? And what is going to be the most advantageous to the communities? You know, is it a combination of pulling data, providing education, providing down payment assistance? What does that look like? You know, one of the other issues that has been brought forth as we look at 2020 data, and I think the most recent number that I've seen is 68% of loans were made by independent mortgage banks, which are not, you know, currently regulated by the CRA Act. Should they be? You know, MBA, you know, has the position that that's probably not the way that we should go. We should look at other things. I mean, obviously, the vast majority of government loans are made by independent mortgage banks. That falls under what you would traditionally consider Community Reinvestment Act loans. So, you know, some would argue that really they're already providing more than if they were regulated by that particular act. So what does that look like for the future? And I don't want to say what is the right answer, but what really does help the community? You know, do you need a regulation, or are they already doing enough?
Well, Christy, thank you so much. Is there anything else that you want to add to, whether it's the CRA or anyone who's considering going through the CMB program?
Well, I would tell you, if you're considering going through the CMB program, stop considering and just do it.
Yes.
There is no time like the present.
And please feel free to reach out to Christy or myself if you have any questions about the program, our journey, the written test, the oral test. We'd love to help wherever we can. With that, Christy, thank you so much for joining the Experts on Mortgage podcast. And I look forward to seeing you at the hopefully in-person MBA annual in San Diego later this year.
See you there.
All right. Thanks, everyone. Take care.